Richard Harris joining in, Chief Executive at Port Shelter Investment Management. Richard, thank you so much for speaking with us this morning. There are a lot of betting sites betting on who gets the Peace Prize. Do you have your own little bet going on?
No, I think it's almost a dead cert that Trump is not going to get it. But there are lots of sensible reasons for that. One of them is it's basically a Peace Prize for 2024, and he wasn't really around in 2024. But the best one is, of course, the Nobel Prize is very much like an English gentleman's club. You know, if you ask to join, if you want to join, there's no way you're going to be accepted. And clearly Trump has held him out front and center as saying he's worthy of it. For the main reason being that, of course, President Obama got it very early in his term for reasons as yet unknown. So I think there's a massive element of jealousy there. It would also be a supreme irony for a man who've changed the Department of Defense into the Department of War to get the Nobel Peace Prize. So I think it's very laudable that finally the US has come to its senses and basically forced Israel into some sort of peace in Gaza. And I think that has to be credited. But I think at this stage, Trump will be whistling in the wind.
Okay, yeah, you've given us quite a lot of interesting bites there. Richard, thanks so much for that. But let's talk about US markets and how you're reading them, particularly because of the lack of data. And these murmurs about valuations perhaps creeping up a little too much are getting a little louder. Would you agree?
Well, I think that's been happening for a very long time, that yes, valuations in the US are high. Very high, but of course, you know, they were higher during the dot-com bubble as well. It is starting to look a little bit like the dot-com bubble. We are seeing a circulation of large amounts of money, very, very large amounts of money between many of the AI providers. A lot of that money will be wasted. In fact, they used to say half of a marketing budget is wasted. You just don't know which half. So in a sense, you have to put that sort of money through in order to try and get some sort of result at the end of the day. So yes, the markets look extremely fragile. They will be very sensitive to some sort of major external shock, which may be a series of bankruptcies, which may be some rise in the price of oil, maybe a real concern about inflation rising sharply when interest rates can't go up, or depression. There are all sorts of shocks that may well happen. At the moment, it doesn't seem as if there's going to be any, but isn't that the nature of a shock, that it comes as being unexpected?
Richard, the one clear bull market which is not having naysayers is hard assets. I mean, yesterday, aluminum, palladium, platinum, all of them, in addition to gold and silver, doing well too. Is that rally here to stay?
I think that actually is a concern. If you take gold first, gold is the asset of last resort. It's the thing people go into in times of war when they're worried about the value of money. Now, perhaps we've been too confident about the value of money for decades, perhaps, and gold has languished. But now I think it is a real concern that gold has put in so much, because people are now saying, well, do we trust the dollar, or is the dollar starting to slide? But if the dollar starts to slide, what's going to gain? You know, do you want to put your money in Europe, where French debt, for instance, is now yielding more than Italian debt and about the same as Greek debt? So maybe money isn't so secure in Europe. Swiss franc, too small. Japanese yen used to be a favorite, but look where it is now. So I think there is a real concern about fiat money, and that's what's driving gold and silver. But pulling up also some of the industrial metals as well. You know, copper is obviously going to be a beneficiary of the AI boom. Uranium possibly a beneficiary of the recycling movement. So there are reasons why the industrial metals are moving up too, as well as the more concern among the precious metals that perhaps they are becoming a bit of an alternative to just keeping your money in fiat money.
Last quick question then, where do you see gold prices, if at all you have something that you've penciled in?
Well, I was always a very stale gold bull. For about 5 years from around 2018. I was wrong, although looking over the last 6 or 7 years, maybe I was right, because gold was the right place to be if you had the the guts to stay in it. I think probably it's reached a reasonable peak for now. The wave will maybe come off a little bit. But I think that if people do continue to be concerned about debt, that things, may well keep on going. Um, Gold is an interesting asset. You can't eat it. There's no real yield. But of course, it's a store of value that investors at the moment, I think, are quite keen to have.